All right. Hey, everybody. This is Ron Haydt from Financial. Happy Friday. Happy Black Friday. Happy Red Friday in the markets. We're going to be going over the top trade ideas, which is what I always do. Whether we're bullish or bearish, it's not going to matter. But we're going to talk about why the bull may not be dead yet, or it might be. But we'll talk about what to watch for and then identify exactly which stocks have incredible track records based off of proof. So if you want proof, I'm going to have it in spades. Before I go any further, I always show this disclaimer that everything is for educational purposes only. Nothing is advice to buy or sell. I am not a licensed financial advisor, therefore I cannot tell you what to do. Trading stocks are risky. Past performance is no guarantee of future performance. Just because something happened twice in a row or 52 and a half times in a row doesn't ever mean it's going to happen again. So when I tell you you can do this and you can do that, and I want you to do this or I want you to do that, I want you to do it in a paper virtual trading portfolio. Why? Not because I don't believe in it, because if you follow it, you'll be writing back to Jeanette saying, oh my God, I want that dude back, even though he has a funny accent. And that's what happens. So they invite me back. I love being here. I actually clear my schedule on a Friday where I don't even do an internal event for my own people so I can be here with Jeanette. I've known her a long time. She puts on a fantastic event, so I'm thrilled to be here. Now, I'm going to move my little chat box over. You guys are welcome to ask questions as we go along. I will answer those questions the best I can. I will do Q&A at the end. I'll take your individual stock questions as well. All right, I see the Q&A box. Everything looks good. And we should be able to rock and roll now. Perfect. All right, we got it. So let's do this. Now, here we are on a Friday. US market is closed. We had a big move. And what's going to be interesting come Monday, and I'm going to show you some data on the S&P here in a moment. But over the weekend, we're going to be looking for the top stocks to soar or crash, depending which side of the aisle we want to be on. And you're going to spend time away from your families, maybe because you want to, because you just spent all day yesterday with them. Or my point is, you could be playing golf, walking the dog, going fishing, just spending time with whatever you want to be doing. And instead, we're all here to make money. That was the point of today, where we all showcase our most favorite strategy for trying to earn income. But then when you get all down, you get it all whittled down, you're going to end up with maybe one or two or three trade ideas. And you're going to try to figure out, well, which one might be the best? And you might say, well, eeny, meeny, miny, mo, which one's going to go, etc. What I'm going to show you today, whether you're a bull or a bear, is undeniable proof and fact that I can tell you, which is almost a little audacious, but it's the truth. It's why I keep getting asked to come back. I will show you precisely which stocks the big money pours into at any time of the year, whether we start now or whether we start the new year, bullish or bearish. It's irrelevant. This is all proof-based. That's the beauty of it. I like to say the data will set you free. So how do we get our life back instead of spending hours upon hours looking for these trade ideas? We're going to go to financial. We're going to click two buttons. We're going to click screen, and we're going to click seasonality. And as we scroll down, these trade ideas will appear. I've asked the software to look for stocks in 2 clicks of a mouse that historically rise at least 5% or more precisely over the next 12 weeks. You can pick whatever time frame you want. I'll tell you that 12, 13 weeks is a beautiful sweet spot because it's the big money. Historical accuracy, hey, how many times have these stocks done this? Do they do it a lot? Well, the minimum threshold is going to be 70%. We scroll down. You instantly see stocks that have track records. That's what historical percent of increase means. That have 100% track records. I'm talking about the airline of all things, SAVE, HCA, ZBH. There's a home builder, Lennar. There's other home builders like the ETF, XHB. There's Pulte Homes. There's DR Horton. There's MasterCard. There's CBRE, KKR, Cognizant, all sorts of stocks in here. So what exactly are we looking at? So I'm going to get my little pen out here, and I just want to show you. Let me get my pen color. There it is. I'm going to circle these 5 columns. What you are looking at right now on your screen is just data. What do I mean by that? We buy our data from the CBOE and from Morningstar. We just buy data. It's very expensive. We built out a software and a program to calculate thousands of stocks each day, each week, each month, put them into a formula, and it just spits back the data. It spits back the net result. So when I come to you and I say, hey, save an HCA, have 100% track records, what does that mean? They've never lost in their publicly traded history over a 12-week time span. Has nothing to do with today's down move. It has nothing to do with tomorrow's down move. It could even be a month worth of down. You held this stock for 12 weeks, ups and downs, every single year they've been publicly traded, and this is key. We are not putting lipstick on a pig. We are not carving out and saying, oh, by the way, if you look back just the last 5 years, this is their track record. This is every single year of publicly being traded. They've never lost. And what was their average move? 15% and 11%. That's just the average. That means some years these stocks may have been higher by 20, 30, 40, 50%. Some years they may have gone up a penny or a buck. You put it all together, the average gain, 15.87 and 11.9. Could you imagine? And this is a little hokey, if you will. It sounds hokey if you've never heard it. If you just did that one trade every year, you've never lost, and that was your average gain. That's better than a sharp stick in the eye. Or I could say, wouldn't you like to know what the stock was about to do before it did it? This is literally the stock sitting on your shoulder saying, hey, you were thinking about buying me? How about I tell you what I've actually done first? That is what we've always wanted to know, right? And now you're looking at it. Now, I can't promise these stocks are ever going to do this track record again. They could do better, they could do worse. No one can guarantee the future, and I won't either. But I can tell you what's happened. Look at how many stocks on your screen have 90% track records. By the way, I know the market was down. We're going to talk about that. This is all data every year they've been publicly traded, whether we had a bullish December, a bearish December, a bullish January, or a bearish January. It's pretty shocking to think that literally everyone on your screen is a 9 out of 10 year winner or better. You start seeing stocks at 91, 92, 93%. Now it's on average even more than 9 out of 10. Okay, so far that blue highlight, it's just data. Therefore, if you are an engineer, you know who you are. You can raise your hand. If you're a scientist, someone who just likes facts, it is staring at you right between the eyes. This is what we got. Now, the next question is, why does this happen? This seems a bit weird. I mean, what causes this phenomenon? And this is easy. It's called big money. Now, if all of us got together here and we're all considered retail traders and the market was open and we all went in and said, wow, so that second stock, HCA, that little sucker has a 100% track record with an average gain of nearly 12% in 12 weeks. That's a percent a week. That's really great. Just a stock position. Even if we all got together and bought that stock today, 1,000 shares each, maybe 10,000 shares each, we might be lucky to make one block trade on the CNBS ticker. What about the other, if the market was open for a full day, the other 6.5 hours? And that's my point. The only way these type of track records and movements can occur is if the big money is pushing it. So it's not a question of who is it anymore. We know who it is. It's collectively the big money. You and me, we buy, we sell today, we're nothing. We may not even be on the ticker, on the block trade ticker on CNBS. It's gone. So it has to be big money that does it. All right. So now the next thing, let me do this. Let me change colors. The nice thing about the big money, when they decide to get in, and this is key, they can't get in and try to scalp a 2-3% gain because they're trading millions of shares. If they bought all in the same day, it would cause the stock to explode higher, or it would cause the stock to just crash and they'd be getting a worse fill. They need to build their position over time, and they don't necessarily want to let everyone know because it can start to appear on unusual options activity. The volume will begin to spike too much, and then it starts alerting people, the market technicians. You may even see it hit a headline. Oh my God, huge block trade on, XYZ stock. So they need to be a little coy with this, a little sneaky. But when they start to buy, it creates this ebb and it creates a flow, almost like a wave in the ocean. We now know, based on what you see on this screen, when they start the buy, they're going to lay their positions over days and weeks. That creates the push. Well, now that they're in, if they just go and get back out again, they could break even or lose. The big money isn't into losing very much. They like to win. That's what creates the push. I'm going to be able to show you literally what you see on my screen, the push. We will know when they come in, and I am not joking. We will know how long they run, and we will see exactly when they start to walk away. And the beauty is when those little turkeys, I should say those big turkeys, when they walk away, once again, they can't sell in one day. They crash the stock. They're hurting their own return. They have to get out over days and weeks. And then all of a sudden, the stock starts to drift lower. You and I, as retail traders, we have so many disadvantages. It's ridiculous. What we look at now is an advantage. We know the window. We know this is the sweet spot, and that's where we want to be. And I'm going to show it to you. All right, let me erase all these drawings, and let me get my mouse back. So now we know, actually, let me go back and circle. So we know a couple things. We know that those 5 columns up top is just data, right? We know that is just hardcore data. No ifs, ands, buts, or whats. It's fact. We know that big money causes these moves. But here's the question. How do we know that this year, 2021 going into 2022, the next 12 weeks, is going to live up to all the past years? Some of these companies, guys, have been publicly traded 10, 20, 30, 45, 49 years. Well, number one, I can't promise you future performance. Nobody can. What I can show you is what I've done. We've just crunched the data in 2 clicks of a mouse. Now, here's what we're really proud of as well. Over here on the right, there's this stock score rating. This is our algorithm, algo. It takes into account 4 pieces of data. Now, my business partner spent time at a hedge fund. The hedge fund is so large, if I mentioned the fund's name or the first or last name of that fund, you would instantly know who this is. We had to sign a non-disclosure agreement. I can't even tell my wife, I'm not joking. They know what I'm showing you, and they can't stop us from showing you because all we're showing you is data. So we have taken all of our key learnings over the past 20 years each plus, and we wrote this algorithm. Because yes, I can show you those blue columns, raw data, but there's something else that I could do to help you. We can cull the herd. We use this algorithm, and it takes into account F for fundamental analysis. That could be things like balance sheets, earnings reports. Now, I have to say could be things like, because I do not want to disclose what's in it, because I do not want this thing copied. We're very protective of it. So there is a fundamental aspect. Could be things like balance sheet, earnings reports. Then we take in C to chart. This could be things like candlestick patterns, moving averages, oscillators, some you may have seen today. We take into account S for sentiment. That could be things like options open interest in the options market, analyst upgrades and downgrades, net changes to analyst ratings. And then we take into account the 4th S, which is that blue 5 columns, the raw data, the seasonality data. We put all 4 into a program, into a metric, and it spits out buy or sell. Therefore, I can come to you very confidently and say, if you had to pick between the top 2 stocks on this list, SAVE or HCA, and they both had 100% track records, wouldn't you think as a trader, I really can't go wrong here? I mean, they're both on. Okay, let me stop. Let's throw in the third one. Let's throw in ZBH. I mean, heck, it has a 95% track record. But I can do something better. I can come in here and tell you guys, be wary of that first one. Because that first one, yes, it has a 100% track record, but you know what? This might be the first year in its entire publicly traded history that it's going to turn out to be a loser because there is something wrong under the hood. So we can cull the herd and remove it. The fundamentals could be off, the technicals could be off the chart, the sentiment, there is something off that has to outweigh our seasonality component of the raw data. And that is what we're telling you. In fact, when you look at this one, which is SAVE, you come down here and look at IHI, that's another sell. I mean, this sucker has a 93% track record. And then UDOW, which is an inverse, but it's also on a sell. Or it's an ultra Dow, sorry. You have to be wary of doubles and triples. Anything that ever goes into double and triple land, you got to be wary of. But these two, both on a sell. So here's what we do. We're going to erase these drawings, get my pen back. We're going to scroll up, and this is what you do. We click the advanced filtering, and we say, hey, let's go from both to buy on stock rating, our stock score rating. This is the culling of the herd. Now, when you look at this list, and this is what I promised you guys when Jeanette sent you those emails, these are the hottest stocks for the weeks ahead, period. Not based off fact, not based off a guess, not based off a theory, not that, well, hey, Jeanette said some nice things about Ron in the intro. He must be a good guy. It has nothing to do with me being anything. This is data. If I die tomorrow, maybe that's a little extreme. Let's say I get run over by a reindeer this holiday season and I'm gone. You guys are fine. You have access to the software. If you bought these stocks today and held them for 12 weeks, this is their track record. Pretty amazing, huh? No longer are you wondering which stocks the big money has pushed. And that's a pretty bold statement. These are the stocks the big money has pushed. This is the fact of what has happened every year these stocks have been publicly traded. The data will set you free. All of a sudden you start becoming a more confident trader. You save time and you say, geez, I wonder if Apple's a good stock to own for the next 12 weeks. Here's my answer. Do you see Apple on this list? No, you don't. So from a historical percent of increase, Apple ain't it. Therefore, if you said to me, Ron, would you trade Apple bullish for the next 12 weeks? I would say, is it on this list? Nope. Then there you have my answer. Nope. Why would I try to outthink this? This is what they do. And by the way, what you're seeing, I can't see who's here for the first time, but generally I think about half of you guys are here for the first time when you see my presentation. I do the same presentation every single time. It never varies. How can I do that for we've been doing this now 5 years. It's the same thing. It's the same group of stocks every year. And that's what's so empowering about this. Now, there is something else we can do with this data. I'm just going by historical percent of increase. We can pop over here and go, what is the move? What's the percent increase? So we click that button, and all of a sudden, you see the stock DQ. And does that rock your world? That's been the average gain. No joke. How about a stock like NXPI? Or how about a stock like On Semiconductor or Micron? By the way, On and Micron were on this list weeks ago. Some of you guys are already on this thing. I'm getting questions about when does the data get updated? So the data gets updated. This is not for intraday day trading. This has nothing to do with futures. If you watch, Hubert, he was talking about shorting bonds and being long bonds. This is completely different. This is about end of day trading. So no, this data is not updated during the day because we're not going to get the data from Morningstar and the CBOE until tonight. The data will be updated tonight. By 6 a.m. tomorrow, today's down move will be in these figures. And if you're wondering, today's down move, is that going to affect what you see on the screen? In general, no. How can I say that? Because we built the software. You're going to need more than one down day in the market to start shattering some of these stocks from buys to sells. You're going to need a second day. And we're going to talk about that too. I know a lot of people are worried and fearful, but there's two things that happened. One, we had a down day on a partial trading day. Whenever you see down days on 3-day weekends, whether it's Martin Luther King Day, whether it's Black Friday and here in the US, or if Christmas or New Year's falls on a Thursday, which creates a shortened Friday, you have to be aware that you can get big vacuums on those types of days. So today, once you saw the futures overnight starting to go down, you pretty much knew today was probably going to be a bad day because you just don't have a full day to trade it. The real question is, what is the big money going to do come Monday or Tuesday? Because now they have the whole weekend to digest it, which we're going to talk about again here in a little bit. So this will be updated overnight. If these stocks, hypothetically, got hit, let's say 2-3% today, their percent increase will be all recalculated. And then the upside would actually even be greater in theory because you have to hold for the 12-week window. That's what's key here. This is not about day trading where you buy today and you sell tomorrow. Not it at all. So if you are a stock trader, you know exactly what stocks to watch. If you are an options trader Who here does long calls and long puts? If you start talking about 10, 20, 30% moves over a 3-month time frame, those long call options, they just don't double. We're talking about a triple. And when you see stocks that have 20, 30% historical moves, then it's not, oh, it did a double or a triple. Did it do a 4Xer, a 5Xer, or a 6Xer? As much as those type gains when you start seeing these epic moves. Now, if you're a credit spread trader, who here does bull puts or bear calls? You already have a multi-directional spread at your disposal. You now pair that with stocks that have proven track records of soaring or crashing. Oh my gosh, this is a match made in trading heaven. All of a sudden your eyeballs just start bulging. You're like, oh my God, you take a multi-directional strategy, pair it with this. Are you joking? It's like, nope, no joke. You're now trading with fact, no opinion. And remember, when you look at these first 5 columns, there's no algorithm in that. That is just the raw data. What I want to tell you is the power of our algorithm and stock score is we will remove, and I'll do it again, we are going to remove anybody that is on a sell. So we have this sorted right now by percent increase. If you are in LNG or Netflix or BDLP, or even Denny's, you got to be careful. These guys have solid track records for the next 3 months, but they're already on a sell even before today's price action. You wouldn't have even been in any of those. Now you're starting to see the power of the algorithm. Let's go back to percent of track record. Save, IHI, and UDOW. You're not even in those either. Keep an eye on some of these top ones. Okay, so now we've talked about what is this raw data. We've talked about big money creating it, and we've talked about the value of the algorithm, that it will weed out any weak performers that we can find subpar, if you will. At this point, you might say, well, how do we know which ones to pick? Well, first off, let's go back and look at stocks that are on a buy, because we only want to see strong stocks. I don't know if you caught this, but Lennar was listed, Pulte Homes was listed, Toll Brothers was listed, DR Horton was listed, as well as the XHB. Those are all home building stocks. Yep, guess what you just learned? There must be a bullish bias to home building stocks, and there is. So we could focus on them. We could focus on an individual stock like KKR. It doesn't really matter. What I want to do for you today is let's focus on Lennar. Let's focus on the home builders. So at this point, all we do is we hit search and we hit seasonality. And we can type in a stock. Let's type in XHB, which is the ETF. Now this ETF, we tell you at the top and we tell you at the bottom how many years it's publicly traded. Over here on the left, you have historical data, a visual representation of what the stock has done. Over here on the right, you have a future probabilistic price. What does that mean? We're not predicting the stock will go there. What we're doing is we're taking all the data we can publicly get our hands on and display it for you for those 15 years. You then take your mouse, you can go week by week, guys, and you can see precisely when this stock might have its best window of time. And if I take you out 12 weeks, what do you see? For 15 years, this stock has risen 7.76% in those 12 weeks. Now that may not sound amazing. We're going to find ones that are way better than this, don't you worry. But this is an ETF, guys. This is a blend of stocks. Because the stock is blended, it's not going to have the bigger percent move, because it's going to have big movers, little movers, medium movers. If you think about a 15-year track record, if you take 13 divided by 15 in your calculator, you're going to get the data you see on my screen. 86.67%. This stock has won 13 out of 15 years if it was held for 12 weeks. That doesn't mean hypothetically you buy it today and then you say, oh my God, the market was down today. It was down 1,000 points. Well, let's talk about that. The Dow's at 34,000. 1,000 points at Dow, 34,000 is nothing like a couple years ago when the Dow was in the 20,000s. These are completely two different animals. It makes for great shock and awe, and it makes for a great headline for CNBC to sell, advertising that the world is ending. It's one day. Let's see what happens next week. So if it was held for 12 weeks, boom, that's what you're looking at. Well, that was just XHB. Let's come up here and type in another one. Let's go to Pulte Homes, PHM. Now, Pulte, guys, I don't know if you're aware of this, but we're talking about a stock with a 49-year track record. That's older than me. Now, what's really fun for me to do these webinars, and David, we're going to look at bearish stocks too. I'm going to have you guys covered with double the amount of trade ideas I told you I would bring. We're going to do them both, but the bulls aren't dead yet. Here's Pulte Homes. Could you literally bring one of your kids in right now? Bring them over to the computer and you said, hey son, hey daughter, could you please tell me when it looks like it might be the best time of the whole year to own this stock? Can y'all just literally see it with your own eyes? It's right here. It's like a hockey stick. What does the big money do to your stock the rest of the year? And you say, sort of like this. What you're going to start to see over and over again is you can become way more surgical with your capital. Why would you hold the stock for a whole year if the big money is literally screaming at you saying, this is the money window right here? That's when they make their push. And guess what they do? Does the big money, let's say in aggregate, stay in Pulte and keep pushing it higher for, all year long? No, they don't. They hit that window between now and February, and they walk away and they go find something else to trade. I am tired of trading against the big money. I'd rather know what they're doing. And I don't know which fund is doing this, but I can tell you they are doing it based off of fact, because that's the only way the stocks can actually move. There has to be a big money commitment. And now you see it. In fact, you see that earnings report, that little dollar sign. You now know that between now and then, there is a 13 out, I'm sorry. We didn't even look at this yet, but Pulte has around a 70 to 80% track record. They do this 8 out of 10 years to Pulte for 5 decades. We've had different presidents. We've had a debt ceiling issue. We've had wars. We've had market crashes. We've had real estate. We've had all these things, bubbles blow up. And for 5 decades, 8 out of 10 years, they push it higher. Yep, that's what they do if it was held during that time frame. Okay, so let's go ahead and erase these drawings. Get our pen back. Let's go week by week. We can see that on Pulte Homes, if I take you out 9 weeks, has a 77.55% track record. Okay, it's actually a little less track record than XHB, but XHB only had a 7% gain. This is 11. That's 50% better. Okay, well, that was Pulte. Let's go do another one. Let's go do Toll Brothers. That one might be well known by a lot of people. 35 years of data. So if we scroll down, time to drag your kid in here again. Hey daughter, hey son, can you please tell me when it looks like the big money pushes this stock? Like, no joke, it's a virtual GPS, it's a virtual treasure map, it's a virtual capital migration. What do you want to call it? You tell me. All I know is look at that line. So now you go week by week. And here on Toll Brothers, you would go, what do we got here? 10 weeks? Right there, 77% of the time. So it's pretty similar to PHM, right? 77% track record. Now let's go to Lennar. You can do this for every stock, US and Canada. Here's Lennar. Same thing. We see that now as the window. Take a look at that, guys. 12 weeks. Remind you, 27 years of publicly traded data. And I come in here and I take my mouse and I show you 12 weeks. 13% move over 12 weeks, 92% of the time. What does 92% mean? Would that be 26 out of 27 years? Nope. 25 out of 27 years? Yep. When's the last trade, the last time you were presented with a trade idea? And isn't this what you always want to know? What's the track record? How do I know that I can believe that this stock might actually be a good one? The big money is talking to you without you even realizing it. The big money has pushed this stock all but 2 years. 25 out of 27 years. So this weekend, when maybe you're talking with your trading friends, say, hey, I have this great trade idea. It's Lennar. They might say, really? Yeah. I feel 92.59% confident that my stock can move 13.85%, between now and February 16th. They're going to look at you and say, is that an Irish coffee? Because you sound a little more weird than normal. But the difference is you don't have an opinion. You have full-blown facts. Now, with the market being down today, you might say, well, what if the market keeps going down? Maybe this is going to be one more year it doesn't win. Or we might be down for a couple days, then the market goes back and rallies, which do you think that over 27? Over 27 years, there haven't been down moves in this stock? Of course there have been. There have been broad market down moves. And yet, all but 2 years, this is what they've done. This is why you need to keep these stocks on your radar. This is why this presentation is so popular and why I keep getting asked to come back. You tune out the noise, everybody's got an opinion, and you say, I'm tired of guessing. I want to see what they've actually done. It's almost like politicians. They say one thing, but they do another. You'll hear people talk on CNBC about stocks. It's like, let's see what they actually do. Let's see what the big money actually does with that money. And now you know. You know that they push these group of stocks that we've talked about. So let me go take you to a chart of Lennar. Now I'm using Thinkorswim. I have accounts at different brokerages. You can use TradeStation, Tastyworks, Schwab, Interactive Brokers. It really doesn't matter who you are using because our software is on our own servers. You go trade wherever you want. This is a Thinkorswim 1-year daily chart. What that means is every little candlestick you see is representative of 1 day in the market. I want to show you something. This was September. Do you see how Lennar was drifting lower and lower and lower and lower? And then it lulls you into a place of almost some complacency. You might say, well, it might stop here, it might not. Maybe it just goes into a range. And you might be scared thinking, oh, geez, it just had earnings right there. And we're drifting lower. Boy, oh boy, maybe it's going to go down here, right? What if I could tell you and sit there and laugh? When I chat with people about my presentation, I say seasonality is like grabbing a bag of popcorn. You're going to get so many funny looks because they don't realize what seasonality really is, which is big money. I said, you watch the beginning of October, this stock will stop on a dime. And then magically, it's going to jump 10, 15% in a month or two. Watch what happens if we go to financial. There was the peak in September, it dips, and it never goes any lower. And all of a sudden, the stock starts ripping. I can forecast out a year using the data and show you what that looks like. Now I take you to a chart and you're like, wait, September was the bottom as we got into October, and then there it went. Well, the same thing's going to happen if I show you Pulte Homes. The lows September, early October, and then it just starts to rally. If I take you back to financial and I show you Pulte Homes, what would we expect to see? Right there's the last dip. It doesn't get any lower, and then all of a sudden it starts to go. There was the low, and there it starts to go. And we do this over and over again that we can actually look out and say, when would there be a window of time your stock would be likely to bottom? I mean, that almost sounds ludicrous to even say that out loud. Like, are you serious? Like, the data doesn't lie. I'm not telling you this. The big money is speaking based on their action of the stock. They're telling you that these suckers bottom in October. And then we go. Now, one other thing I want to start to call your attention to, I have 2 lines on my screen. There's a lot of great indicators out there, different oscillators and so forth that I could go into, but then this presentation would be 3-4 hours long. There is one line I want you guys to all use when packaging with seasonality. It is this orange line. I call it the big money line, the money line. It's also known as the institutional moving average. So this is called, I'll write it on the screen. All right, let me get a pen, orange. It is called, GoToWebinar is so weird with their tools. It's 50-day moving average. I don't give it the name, the institutional moving average. The investment community does. If you were to enter the markets today and you took a course on how to do charts or how to learn about markets, they will tell you that the 50-day and the 200-day are the two biggest institutional moving averages out there. I want to draw your attention to the 50-day, which is the orange. You can make it whatever color you want. You will be blown away that when stocks cross up through that orange line, only in their seasonal window, the magic that literally takes place over and over again. We will use their own line, the institution's own line, as our secret weapon. It'll be our edge in the market. I don't care about it over here. I don't care about it here. I don't care about it here. What do I care about? Right there, baby. That is the only time we're going to care. Because if we're going to use their line against them and they're putting their big money in based off historical track records, what do you think is going to happen? And it's money. It's bingo, as I call it. All right, so we're going to erase these drawings. I'm going to get my mouse back. And what do we see? Stock crosses the orange line, and then it jumps about 8% on Pulte. What does Lennar do? It gets through the orange line. It goes from 100 up to 114. That was 14% pretty quick. Now it's down a little bit, but that was a quick pop. And the same thing happens to XHB. We cross the orange line here, and there we go. Funny how that happens. Do you know that the S&P goes through its seasonal bullish period towards the mid to late October, and then it rallies right into December 15th? There's really only one day of the entire year where I can come to you and say, quote, the Santa Claus rally, the holiday rally. Anything will ever happen on literally a day. December 15th usually marks the end of the rally for 2 weeks. And then January, it is a bat out of you know where. It gets reignited and off we go. Certain individual stocks, literally the moment we go January, they go nuts. By the time the middle of January rolls around, the market's all gone and we go off again. So whether or not we correct from now till then, or today was a one-off event because it was a partial trading day, we have no idea. What I can tell you are these track records, they're no joke. All right, so we know that the orange line is so important because it's their own line. We know that these stocks entered their bullish periods as we got into October. We've now seen some of these moves over and over and over again. Okay, great track records. What about other stocks? When I was with you guys, I was trying to find the last time I was with you. It was a few months ago. I think it might have been August, the last time I was in, and we talk about stocks, and I give you trade ideas looking out into the future. And if you were here with me a year ago, it's the same stocks at the same time. I told you guys to watch stocks like ICE, stocks like AMD, stocks like Disney, which we'll talk about, which did not go up this year, but we'll talk about it. And it's the same time every year. You wait for the middle to late October. And here was the S&P. Let's actually do the S&P first. With the market down, I'm doing a little bit of a different type of presentation in the sense that I want to let you know that today, so far, is a one-day event. I want to take you back to September. This is the S&P 500, the broad market index. Look at the orange line. Now, the orange line is really important on the S&P, generally speaking, year-round. We don't care about it as much on individual stocks, but on the S&P, it's pretty important. And you'll see that in January, it hit it, it bounced. We broke it for one lousy day and it bounced. We hit it, we bounced, we hit it, we bounced. We broke it for a day and we bounced. Hit it, we bounced. Hit it, we bounced. You get the idea here, right? The 50-day on the S&P, pretty big deal here. This time in September. So who was watching the market in September when the S&P finally broke the 50-day and then we had a big down day? And I know that some of the people on TV were saying, oh my God, this is the end. Here it comes. So I do member webinars for our members just to let them know what's going on in the market. And I'm like, guys, I can't predict the future. I know they say the market crashes in September, but that's a bunch of crap. I can prove it to you, which I will next. It's a bunch of crap. Historically, the market does not have this huge, horrible September and October. It's just not true. It makes for great headlines to get you to watch their commercials, but it's just not true. So the market it gaps down. And I said, and people started asking, which you should always question everything. They said, Ron, the market's crashing in September. I'm like, well, maybe it's gonna, I don't know. Historically, it doesn't, but it could. And they said, well, what would you watch for to see if the Christmas rally, the holiday rally is going to come? I said, well, first of all, we're in September. We're 1 month early. It's a perfect time for a correction. Let's see what happens when October gets here. We come over here. We almost go lower. We bounce and we sit here. So now we're in the middle of October and folks were saying, oh, they're talking about overvaluations. They're talking about all this negative stuff. And there's always a reason. I said, here's what we're going to do, guys. We're going to watch that orange line. We know that the seasonal window begins at the end of October and it runs through May. It's well known in the world. It's called you sell in May and go away, you buy in late October, November, and you run it through May. Look what happened when the S&P crossed the orange line. Remember, this is not my line, it's their line. It's the institutional moving average. The stock pops it, and all of a sudden the S&P goes from what, 440 something, all the way up to 473 on Monday. The markets moved 10% in a month. And if you guys watch my presentation, which I think Jeanette brings me in about twice a year, usually, this is one of them. I tell you the same thing every time. Wait for the end of October. We were about a week early. It pops and it's off to the races. If I take you and I type in the spiders at financial, look at this. This is the S&P. Look at this dip in September. There's only a couple percent dip. It immediately stops and then it goes on a run. And this line just starts rising and rising and rising. The S&P continues to rise. In fact, if I take you out for 12 weeks on the S&P, this is the bullish bias they talk about, but it's only 2.86%, 71% of the time. I've just shown you stocks that have held for that in full 12-week period. They're 10x this. I don't know about you, but I certainly wouldn't be benchmarking my performance as a trader off the S&P, because if you told me that I could make on average 2.8% in 12 weeks, I think I might give up trading completely. I can't promise anybody any returns, but that would be more than peeing me off. I would consider that an insane underperformance if it was me. Or we can go to financial and go to that list I showed you at the beginning of the prezo, and we're looking at stocks that do 10, 20, 30, 40% over the exact same time window. This is why the value of financial and saying, let's just go find the ones that move based off fact. Duh, that's exactly what we want to do. Now, if you said to me, well, how does the S&P typically perform to year end? I can tell you 71% of the time we get a 1% rise. Remember, I also told you that December 15th literally marks the market top. Look at December 15th. That is the peak. And then this line ever so subtly drops just for a week or two. And then it pops up, it goes a little down, and then off we go again. You literally can type your stock in here, I'm telling you, and see the ups and the downs and the averages associated with each. I will share with you 2 stocks that have 100% track records. Not even COVID stopped them. We're talking about a new COVID variant. Not even COVID a year ago, when nobody knew anything about anything, would even stop these stocks. Okay, so now we know the S&P has a bullish track record if it's held for 12 weeks. We know stocks that have these great track records. Let's go look at Disney, because this is a stock I always come to you every year and I say, hey, my free gift to you, we've already done it. We've already passed the point. Watch Disney. This stock is publicly traded 49 years, and you can see that this stock goes up and it goes down. 49 years. Now, different presidents, different valuations of the dollar. We went through all this, all the different things in the world before their acquisition of Disney and ESPN, which is turning out to be a disaster with ESPN. Before they bought Star Wars, before they bought Pixar, before they had more theme parks, before they had a cruise line on their own island, yada, 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 right? You can actually see what the big money does in aggregate. And then it pulls it back. Did you know that if you went out and bought Disney today and you held it for 27 weeks, which is nearly a half a year, this stock has a track record of rising 8 out of 10 years with an 18% gain? There's one thing I haven't said here yet, which I forgot about. The other question you should be asking me is, what about the losers? If these stocks did not win every year, did the losing record, did that losing data destroy your winners? Because after all, you could win 9 out of 10 times, 99 out of 100 times. But if that loser wipes out your wins, sort of defeats the purpose. The losers are in the data. That means even the losing years, you still had an 18% gain. Like, proof's in the pudding. Now, when it comes to Disney, I want to take you back 5 years and show you something. Normally, I wouldn't talk about Disney in a presentation when it doesn't work, but because I'm always here with you guys and Jeanette, this is absolutely critical that we review it. Here is 2016. Oh, that's the spiders. Like, wait a minute, it doesn't look like Disney's chart. Something looks wrong there. Hang on. Here we go. And we're going to speed this up. We know that the summertime is an awful time to buy Disney. And if you want to have fun with your friends this weekend with the holiday, ask them when they think a good time to own Disney is. All my family and friends, I've done it too. So they all, 9 out of 10 of them say the summer. The one that doesn't knows that whatever I say is going to be the opposite. So they're going to pick the winter. But we know the summer is bad on Disney. We've gone to financial. We've seen the data. If you guys think that buying Disney in June and holding it till September or something is a great idea, you have lost money. Stop losing money. Don't do that. Consider buying it here and then holding it. And then you see your track record, which is absolutely stunning. So down we go. All of a sudden, the stock pops the orange line right in the seasonal window. Now, what do I tell you guys? I say, wait for the earnings report. You never know what's going to happen, even though there are seasonal biases to reports, because we know that Disney has a 6-month track record. Well, November and February, those earnings reports, which are little red circles with a phone in them on Thinkorswim, those circles are earnings reports. You now know, not based off guess, but based off fact, that in aggregate, Disney has a bullish bias and the stock goes higher. Wait for the stock to have earnings and make sure it's above the orange line. If those two things happen in the seasonal window, you're golden, in my opinion. There's earnings, stock goes from here, from like 90 something all the way up to 115. That was 5 years ago. Well, surely this isn't going to keep happening, right? Let's keep going. And then, come on, Thinkorswim. There we go. Now here we're in 2017. Stock goes down. Somebody said to me in the summer of 2017, Ron, Disney's rallying in the summer. You said May is the high and typically October is the low, just like you can see on my screen. May high, October low, but it was rallying in the summer. I went to financial and I'm like, you're right. The high is usually May, June, and then it dips into fall, into October, and then November rips for, on average, 6 months. So somebody said to me, you told me that Disney can't rally in the summer. I was like, whoa, hold them horses. What I'm telling you is, historically, if you bought Disney over the summer and you held it for the summer, you're a loser. I said, we're going to see how this plays out, and we're going to find out if this is the big money leading the sheep to slaughter. And all of a sudden, Disney pops the orange line and starts rallying. And I said to the members, don't trust it with a 10-foot pole. How frustrated do you get as a trader that you buy stocks that they look like they're on a breakout? All the technical indicators, all the oscillators, everything looks amazing, which is true. But here's the question. What is the big money doing to your stock? Are they a buyer or are they a seller? You know that they're a seller on Disney. You know you don't touch Disney. How frustrated would you have been to buy this stock at 110 and then a month later you're at 100, a month later you're at 95? And then what do? You throw the stock away, and then we get to October and November again, the stock pops the orange line, you wait for earnings, you buy at 104, and all of a sudden the stock just starts roaring. Do you see the insight you now have? We wait for the stock to hit the window, which we know from financial. We make sure the stock's above the orange line. It's their own moving average. We're not even getting I'm not even selling you a moving average. We're going to use theirs because it is theirs, and wait for earnings. And that's it. We're done. You walk away. Okay. How about the next one? Let's do, where are we going? Here we are. Here was 2019. Stock is here, it has earnings, it pops, it goes from 137 right up to 150. You know that when stocks rally in a short period of time, 10, 20%, those options will double, triple, and quadruple in value. Same thing happened. Let's go over here. This is COVID. This is last year. Think back a year ago. Were we allowed to have Halloween? No. Were we allowed to have Thanksgiving? No. Were we allowed to have Hanukkah? No. Christmas? No. New Year's? No. They even killed the Easter Bunny. Everything was dead. Now put yourself in Walt Disney's shoes. November a year ago, the stock was at 125. Cruise lines are shut down still. Theme parks, no international travel to reduce capacity. Some theme parks overseas are closed. Virtually no one's traveling. How could Disney even make any money? That was the question besides streaming. And what did I tell you guys in an event a year ago with TradeThirsty, which I think last year would have been around the end of October, I think we got together. And I said, all you're going to do is this. We're going to trust but verify on Disney. If the stock pops the orange line, which it did, that's check one. Check two, earnings. If Disney is up on earnings, we're in. There was earnings. You're in around 137. The stock then goes 140, 150, 160, 170, all the way up to 180. In a matter of weeks, this option increased, I think it was 5-fold. What about this year? Here was Disney. It's the stock I tell you about every single year. What's the criteria? We know the window, November. Is it above the orange line? No. Is earnings out? No. Stock gaps down on earnings. Are we in the trade? And the answer is no. The big money is not a buyer yet. In fact, the big money sold and they're still selling. So when I come to you, I will show you winners, I will show you losers. In this case, we weren't even in the trade because we weren't even above the orange line. I do not know why the big money is not buying Disney. We can all have our opinions, but they're all irrelevant. As of now, they are not committing to Disney. So does that mean Disney is dead this year? I have no idea. So what would we wait for? We wait for the stock to get above the orange line. Until then, no one lost money. We're not in the trade. Maybe this year it doesn't work. And before you think that Disney may not work this year, which by the way, you will not be forgetting about this stock. You must keep it on your radar. You do not get publicly traded, in my opinion, for 49 years and have an 80% track record for nothing. I'm now going to share with you one of my most favorite stocks of all time. It's Dominoes. Dominoes is publicly traded 17 years. Bring your kid in again and say, son, daughter, pet cat, pet dog, you tell me, when's the best time to consider being long Dominoes? That line right there looks really, really good. And the rest of the year, it basically goes sideways in its chop. I like Papa John's pizza really like a lot. I like pizza, but I like money more. I just want to know that if I'm going to consider buying a stock, I have my money in when the big money's moving, because the big money is what moves markets, not that I think it's a good trade idea. You can actually come to Financial and you can click best period. And I don't want to get sued by Amazon, so I'm going to make this one word. Hey, Financial Alexa, could you please tell me when the best time of the entire year is to be long Domino's pizza? You click best period. And Domino's has a 19-week period. We're going to overlay a green line, and I want you to read that box. Domino's has risen an average of 25.95% during this 19-week period with a track record of perfection. Now, I heard Jeanette say that all the offers today will end, and that is true. I heard Jeanette say that she's going to put this on the replay. I'm going to talk with her that she can leave it up for a couple days, and I'm going to ask her if she'll take it down, because this is my gift to you guys. I don't want the world knowing this. What you are being given is a literal gold mine of information on this stock. Never ever has it lost. And I'm not talking about a little 2% gain. I'm talking about 25.95%. There are some years, guys, in that same exact window, this stock has moved more than 50%. If you are just a stock trader, you'd have to be elated. Could you imagine placing this one trade every year? I don't care if the market would be down in January or not. You buy it that date. You then go into hibernation. Maybe you've taken one of the seats on one of Elon Musk's planes to Mars, and you're like, I'm going to be out of touch for 3 months, guys. You come back and you set an alert and you say, that's when I'm out. You've never been a loser, not even during COVID. So check this out. Here's DPZ. Let's zoom in. Here was last year during February. Nobody knew at that time, I think you would agree, that when they said, remember how they said with the virus, hey, we're just going to lock down for 2 weeks? At that point, businesses were like, okay, we do this for 2 weeks and hopefully everything gets better. So no one knew to go buy Dominoes. No one knew to go buy Peloton yet. It was supposed to be a 2-week thing. But this is what's amazing about this. You knew the window. You knew that if you bought in December and you held through April and May, you've been an amazing winner. Every single year, even before COVID was a thing. So check this out. Here was February, lockdowns were beginning. Stock pops the orange line. You have 2 choices. You can get aggressive, which some people do, and they buy before earnings because they know what happens. There are earnings biases. If you got in early, you were handsomely rewarded. People wrote in saying, I've 10x'd my option. It was like, I think it was a 10xer or an 8xer. It was insane. If you did the trust but verify approach and you waited till after earnings, look what would have happened. You would have bought around 370. It pulls back. And then before you know it, you're up in the 400s. You didn't lose. So think about the variables in this. You could have gotten aggressive in before earnings, which is clearly aggressive. You could have bought after earnings after the stock went up from what, 290 to 3 something. It's up $100 a share. You then watch it pull back and you're like, we still went higher, even during COVID. How about this year? Let's zoom in. So now this is this year, 2021. So we saw what happened last year, crazy COVID volatility. This year, you're going down, you wait for earnings. This is just like Disney, guys. This is why you cannot take the eye off Disney. The big money's going to do what the big money does. They don't watch CNBS for actual actionable advice. The stock goes from 365 and it goes down to 340. It's down 20 bucks. A week later, you're in the 320s. What is the rule? We identify the window. We wait for the stock to cross the orange line. The moment it crossed the orange line, the stock closed at 369. By the time the summer came around, you're at 530. You tell me, was that a good trade? Was $150, $180 on a stock, almost in a straight line for months, an okay trade idea? Guys, you tell me what happened. I thought earnings reports mattered. I thought earnings reports are supposed to tell us what the future holds for our stock. But there's an asterisk to that. It's only if the big money gives a crap. If the big money's going to sell it, it's going to go down. If the big money's going to use this as a buying opportunity, it's going to go up. Jim Cramer famously said, on air, live, I heard it, CNBC, he was aware that funds would call up news reporters and give false comments, completely made up bogus junk to get them to write a negative story to add selling pressure to the stock. So the big funds could come in and buy it on a discount so it wouldn't look like they were buying all at the same time. Look what happened. Here's the earnings report on February 24th. They sink the stock. Are you telling me that by the time March 22nd rolls around, all of a sudden that earnings report no longer matters and they're going to jump the stock, what, 30, 40, 50%? Like, are you kidding me? And that's what they did. And you knew that's the window they do it. Could you imagine how awful would you have felt and said, oh my God, the stock went down. I think I want to short this thing. Everything looks bearish. And then you go to financial and you say, oh my God, this is the window when they buy it. We cannot be short this stock. This would be a horrible decision. And not only don't you get short, you go from 370 to 500. Better than a sharp stick in the eye. So no, not even Dominoes. And if you want to see another one, type in Netflix. This is my second gift to you, my other 100% winner. Remember, I'm not a good stock picker, guys. We just spent a crap load of money building financials so you can come in 2 clicks of a mouse and you know exactly what they do to these stocks. You scroll down on, Netflix and you take this to a 13-week period. Netflix is publicly traded 19 years. Check that out. Green letters. Netflix has risen an average of 30.27% during this 13-week period with a track record of perfection. It's never ever lost. When does it start? January. When does it end? April. Even during COVID the first year, even during COVID last year. And now you know. And the only way to do this is if the big money is pushing them. So you start saving time, no more guessing, more confidence, you know who to target, you become surgical with your capital. And as some of the folks said earlier today is, stock picking can be hard. And it is, because how do you know? Apple could be a great one. Well, Apple wasn't on our list. Apple is not a historically good stock this time of year. In fact, Apple's a great bearish trade in September, but not now. Apple's not a great bullish idea right now. How could I ever say that? Because I just showed you the track record by going screen, going seasonality, and I laid out precisely which are the absolute best performers if they are held during that time frame. Nothing about a 1-day down day or 2 days down day. You hold them, that's the record. And the first one, never ever lost. We even tell you the gain. You know starts, you know ends. And if the market does roll over, you know what we're going to do next? We're going to look for bearish trade ideas. How do we do that? I have my settings saved. We're going to come in here. We're going to look for stocks that historically fall. You tell me, 2% or more, 3% or more. Do you want to go out 8 weeks or do you want to go out for the next month? Because if the down move actually does happen, which is rare in the month of December, but if it does play out, we know who to watch. We'll look for stocks that have historical track records of at least 55% or more. And this is important. The market has a natural bullish bias. That's why the Dow's at 30-some thousand. The S&P's at 4,000. So whenever we get a bearish move, it doesn't last long and it's very finite periods of time. This is your list. These are all stocks that are rated to sell. If you own any of these stocks, take a quick picture, take a snapshot, whatever you want, you better be on alert. This is even before today's down move occurred, which actually wasn't that big in the grand scheme of things. You own these, you've been put on notice. This is the naughty list. You do not want to own these in aggregate based off the data. Does that make sense? So we don't care. Now let me show you one other thing. The stock score algorithm that I talked about when we first did screen, and in fact, let me do this, search stock score. Let me go back here. Remember how we started the presentation and I said, hey, I want to show you guys the hottest stocks for the weeks ahead. And I said to you, we're going to go 12 weeks, look for stocks that historically rise at least 5% with 70% accuracy or more. And I said to you, wow, check this out. Or did we do 13 weeks? Hang on a second. Let me just make sure. Oh, I did 10 years. I was going to say, wait a minute, there's data missing. There that is. And one of the stocks at 12 weeks, there it is. Save. It has a 100% track record. And how could we call the herd? How could we know that even before today's move, that Save with a perfect track record, maybe this is the 1 year it's going to falter. Whereas HCA, it's never faltered, and we're rating it a buy because we're taking into account fundamentals, technical sentiment, and seasonality. It's because of the algorithm. We're telling you that we can't find anything wrong under the hood. That's why we're saying it's a buy. So this still looks good for the next 12 weeks. Well, check this out. For those of you that are worried about the S&P and this becoming a major sell-off, I want to show you something. We are incredibly proud of this. We're going to type in the S&P ETF. I'm going to take you back 2 years. This is purely our algorithm. You see this green? It looks like a histogram. If it's green, it means long. If it's red, it means run, exit. The last buy signal on the S&P was April 6th a year ago. I want to ask you this question. Have you been long the S&P since April 6th? We closed around 250, 260. We were at all-time highs practically this week. You are up almost 200 points on the S&P. 200 points. How many times did you hear, oh, the market's rolling over, we're going to get a sell? Nope, Nope, we didn't crash. Nope, we didn't crash. Nope, we didn't crash. Nope, we didn't crash. We've been on a buy the whole time. And this is critical. After today's move, the data will be recalculated. The stock score is still so high. I'm going to tell you right now, even with today's down move, which wasn't that much in the grand scheme of things, we're not going to be on a sell yet. This keeps you out of historically the whipsaws. So look at this. If you bought the S&P just as a buy and hold from the day it went publicly traded, you're looking at a 974% return. If you only held the S&P with our algorithm, you're up 60% more. It's a 1,600% return. So whether you want to use seasonality, whether you want to use stock score as your guide to say, hey, we had a down day in the market. If we get another down day Monday or Tuesday, are things going to get bad? We'll actually tell you. You can come in, hit watch list, put the spiders in, and we have an alert that's triggered. We will actually tell all of our subscribers. It's all done by the algorithm the moment the S&P goes on a buy. So if you said, hey, thank you for the S&P buy a year and a half ago, we're up 50%, for example, congratulations. Because when you look at our stock score and it goes on a sell, which I've already shown you, come on, here we go. And I zoom in, we were on a sell on March 6th. That was the last sell. So during COVID, look, went on a sell in February, went back on a buy. You then went on a sell here at 290. You missed that whole drop to 220. You get to sidestep the decline in this example, and then you were back in here, out here. Well, that's basically a wash. And then you're back in from 260 through today, and you're still in. So you're going to get the best of both worlds. You're going to know precisely which stocks to target. We're going to email you on an alert the moment your stocks go on a sell, and you can be like, I'm getting out of Dodge. Well, we ain't going to be there yet today. We would need another down day Monday before that even gets close. So I like to say is when people start talking about the world's ending or the market's going to crash, I would come to you and say, really? Because they tried tanking it in September a year ago, in November, they tried tanking it here, they tried tanking it here. You look at today's move and you go back over other periods, there was just no teeth. The dog barked, but there was no bite. We need to see the bite, and we'll let you know when that happens. So here's what I'm going to do. I went longer today. We're already at 418. We get testimonials all the time without even asking. The only way you tell other people about your service is if you love it. Jan tells her friends. Monica's like, hey, my trading accuracy has skyrocketed because I'm no longer wondering why the stock I picked didn't move. So when I was talking with Jeanette, she knows I pulled this price. I pulled it last year and I said it wasn't coming back. And it was higher even a month ago. So Jeanette said, is there any way you can please give us that Black Friday price? She goes, it's my event. I want the best price for my peeps. I've created a special link for Jeanette so you can thank her when you see this price, and it's all because of her. This just isn't my Black Friday special. This is the mother of all Black Friday specials. The only catch, I'm doing a members webinar tomorrow. You will be invited. There's 50 spots. I can't handle more than 50 because if I do, tomorrow's going to get chaotic. I will do 50 people and I'll mix you in with all our members. We're going to go over trade ideas, hitting the ground running Monday, bullish and bearish. It won't matter. We don't care. But here's the deal. If you are on our website, the retail price is $1,800 a year, $1,788. It's not $997. It's not $797. The lowest price I've been doing now is $497. So this is Jeanette telling me, Ron, I want this. It's the best price ever. It's never once been lower. And here's your deal. It's $397 a year, and you get the grandfathered clause, which means you get to pay this every single year. Your rate never rises. $397 Platinum Access. The link is financial.com/thirsty. You must use that link to get her deal. If you go to the website, you're going to be paying about 5x that price. Don't do that. Get this deal. So what exactly do you get? We covered a lot of stuff today. You're going to get a copy of this hot stock list. Guys, this is going to be a standalone offer next year. We're thinking about or it's going to be around $199 a year. You will not pay that because you're part of Jeanette's group. When you log in, you'll be able to download this hot stock list immediately. Because I helped design the software, I know exactly which stocks are some of the best performers every single month. They're all listed. It's like the mother of all lists, if you will. Tomorrow, we're here today on the 26th. Tomorrow at 10 a.m. Eastern, I just told the members, hey, market was down. Let's go do a webinar. We're going to look for bullish trade ideas. That might sound absolutely crazy, but if you look at the S&P when we've had these big down moves, there was zero follow through. If there is follow through, tomorrow, we're still going to look at bearish trade ideas. So it does not matter what the market does. You will have both at your disposal. We'll talk about the strike prices. We'll talk about the expirations if you do options. For stock traders, life doesn't get any easier because you see buy, you see sell, and you're done. You'll also get a copy of the entry and exit system that I will teach you. That's yours as well. Here is one bonus that I think is priceless. 5 years ago, when we launched Financial, and by the way, Jeanette asked me if I was still doing this, and I told her yes, so you will get it too. But this is a free bonus. I could stop at any time. I'm very clear on this. But for 5 years, I've continued to do it. Once or twice a month. Right now, it's twice a month. Last month, we did 6 webinars in 2 weeks. 6 times we outlined trade ideas because I told you, this is not tooting my own horn. This is me telling you, guys, you have got to be ready for the end of October, beginning in November. You have got to be ready for January 1st. You cannot miss these windows. Yes, there could be pullbacks in between. You miss those windows, your performance for the year is going to be less historically. That's why I could come to you and say, oh my God, where is it? Here's the S&P. I know what they're going to tell you in October. They're going to tell you the market's going to crash. Don't listen to them. Watch the market cross the orange line, and these stocks that I gave you, FFIV, ACE, ICE, AMD, FFIV, the list goes on and on. Get ready, and what happens? The whole blanket market, it just explodes. And they were talking about new lows. I'm like, yeah, no, we're in the window. You've got to know these windows. So I tell you the stocks to watch. Now, the whole point of this is, I do this because I love it. But if I do get run over by a reindeer this holiday season, y'all are fine because you have access to the software. The software tells you which ones to watch. So you tell me what that is worth. Once or twice a month for a whole year. This is not a quarter. This is not me doing a special event on the weekend and then we're done. This is once or twice a month for 12 months every year. And the sessions go sometimes 2-3 hours if you care to stay that long. And what do you guys get? One heck of a deal. It's the price from 5 years ago. It is $397 the whole year, locked in for life. You get 3 new every year at this price. You don't pay more for platinum access, but you got to use Jeanette's link, financial.com/thirsty. If you have questions, please go ahead and put them in. I'll answer them. I don't care what they are. Let me know. And we'll talk about all of them. Now, what else do you get? We talked about seasonality, whether it's bullish or bearish. The stock score. Normally, I don't spend much time on this because the market is historically bullish most of the year. So if you were in a webinar with me last time I was here with Jeanette, you would have known that we spend 95% seasonality, 5% stock score when I do this for you. Because all we care about is stock score on a buy for bullish or stock score on a sell for bearish. What you need to know is, because of today's events in the market, if there is follow through, you need to know if the stock score hits a sell. We don't know how far the market may drop. Are they going to do lockdowns again? We have no idea. Hopefully not, but maybe they will. And if they do, and the selling gets ferocious, we're going to trigger a sell. We're going to email you that day when the numbers they just crunched and you're like, I'm out. How cool would that have been to know you're out here around, what, 290 on the S&P, and then a couple weeks later you're in the 220s. You just saw 30% of your capital get destroyed in under a month. And then we're like, yeah, by the way, the last buy signal's over here, and now you've been long from 260. I mean, what's the S&P at now? 260 to 470, 260 even today, you're at 458. You're still up practically 200 points on the broad market, for God's sakes. I mean, that is epic. You were never washed out even here, because I'm like, it's still not on a sell, still not on a sell. and then you didn't get flip-flopped, you didn't get wish-washed, or whatever you want to call it. So we have an income screener. You also get access to a covered call screener. Our suite of tools at Financial goes way beyond seasonality. It goes way beyond stock score. I can't cover them all here because we're all going to be here for hours and it's getting close to dinner time. We have a covered call screener built into Financial, a full-blown screener that you will see other companies sell for 50, 100 bucks a month. You don't pay anything. It's all part of 3308 a month. So, hey, Jeanette, thanks. And by the way, please do tell Jeanette thanks. I thank her when I come in, but she did lobby for this deal. And one of Jeanette's most favorite things in the world is if you send her an email and you just say, go Tigers. That's all she cares about. We also have value investor stocks. This is Buffett style fundamentals. This is from our time at the hedge fund. We have newsletters. We will send you trade ideas. What does that mean? We're going to send you covered call trade ideas if you're a covered call trader. If you're not a covered call trader, well, then you don't need to even read the newsletter. But if you are, it's going to be helpful. We'll send you seasonality trade ideas. And then we have watch lists. The one thing I didn't talk about much is our time. If you guys go to watch lists, whether you're trading at a different broker, whether it's Thinkorswim or TradeStation or Interactive or whoever you might like, download your watch list from your broker. This is also part of your membership. Download it and then stick it into our site. All you have to do is hit this upload button. The moment you guys do that, I want you to click on advanced filtering. You click on advanced filtering, you can then take this slider, which is the seasonality move. Remember, we're not forecasting anything. What we are telling you is, this is what the big money's done to your stock. You can say for the next 4 weeks, how does Apple perform? Because maybe Apple's in your portfolio or it's in your watch list. And I can tell you this, historically, you don't make any money in Apple. Why? Because only 55% of the time it goes higher. Well, that's like me and you playing eeny, miny, meeny, pin the tail of the donkey. I can't even talk. The seasonality move, 0.87%. This is where I'm telling you, you will be more surgical when you start considering capital allocations. If you told me you want to buy Apple today and you want to hold it for 10 years, that's a completely different animal. I'm telling you that if you said to me, Ron, I want the best chance of making money and trying to pay for some Christmas and Hanukkah presents. Apple ain't it, guys. Not as a directional trade. You know who is worth considering? Caesars, if it goes on a buy. Maybe DPZ. 76% between now and the next 4 weeks isn't bad. But how about this? Let's go out and say for the next 3 months, what's a good trade idea? Oh, for 3 months? Guess what? Now Apple has a 70% track record. All of a sudden it's way better. It depends on the time frame you want. But if you think Apple traditionally is going to, make you enough money to go buy a nice vacation between now and year end, I hate to burst your bubble, but Apple is not a good investment for a month. Well, how could Ron say that? Because that's what the data says. That's the proof. You don't trade blind anymore. You know exactly what you're walking into from a historical perspective. So you get that as well. The watch lists and a bunch of other stuff that I won't talk about because we're out of time. Reagan's telling me we just passed the halfway point, or we're at the halfway point. We're at 28 spots. So here's what's going to happen. After you join, oh, I forgot to do one thing. Crap. If anybody missed this, you have to email me because you're getting this because of Jeanette. So there's going to be a pop-up window, and this is going to allow you to get a second year, all because of her. Did I say Jeanette's awesome? At $297. So what does this mean? Okay, $397 is what we came in with 5 years ago. We've added way more to Financial. You're getting Platinum Access $397 every year forevermore. This is the double Black Friday deal. You can get a second year at $297. I kid you not. I think at $297 divided by 12 is $24.75 a month for your second year. The third year, you go back to $397. That's just crazy good. You can pick up that too. If you missed it, you got to shoot me an email and we'll add it in for you. So that's a super duper deal. All right, questions. Let me see here. Can you do ETFs? The answer is yes. Hey, Mark, yes, you can. As long as we can have an ETF, as long as we can get the data on the ETF, you're in. US and Canadian. So we typed in, you might have missed the beginning. We typed in XHB, which is the home builder ETF. But you can. Carrie, does this work on 2, 3x ETFs, meaning leveraged ETFs? Nothing works on leveraged ETFs. That's a pretty bold statement, huh? But nothing will work because double and triple leveraged ETFs are designed to go to zero over time. They literally have what's called theta associated with them. They're always rebalanced and then they're reverse stock split. And if you go to Direxion's website, who is a creator of the doubles and triples, they will tell you that. They will tell you that it is a horrible investment. They legally have to because people don't understand. So will I personally trade a double and a triple? Yes. Will I hold them for more than a day or two? Yes, and I have. Can you lose all your money? Oh, heck yes, you can. You can actually see the stock go in the right direction and you lose money. And you're like, how on earth could that ever happen? And that's why. Couple questions here. Could black swans, I'm going to paraphrase this, can black swans adversely affect? Yes, it can, but we even saw black swan, yes, last year, and yet we still knew which stocks to watch, like Dominoes, and it still worked out for an amazing gain. There are other, I can't comment on other people's seasonality services because I'm not familiar with everybody else's, so I can only focus on mine. What we've built at Financial goes beyond just seasonality. There are newsletters you get access to. We have lists, which are value investor stocks, which are Buffett style fundamentals. There's only 2 stocks that even meet his type of criteria. You can screen for covered calls. We have a valuation tool. We have book value. We have dividends. There's a whole lot of other stock related data that you're getting. But I have to say, I can't cover that today because we need to get you guys out of here. Otherwise, I'd be here forever. What I want to focus on, if you said to me, if you joined today, what would be the 2 pieces of information that you are going to spend your time as a trader doing tonight, tomorrow, over the weekend? It is going to be screen seasonality. You need to identify who the big money pushes. I'm not telling you this is who I think they're going to push. What I'm telling you is this is what they have done. These are entirely different things. I'm proving to you what they've done by showing you the price action. It's what they do. And then you're going to be in stock score because you want to be able to type in a stock and say, hey, how has Ron's algorithm that they've created over there, how has it worked historically? And then I show you the spiders and you say, oh my God, I understand Ron can't promise future results, but dear Lord, this sucker's been long since April 6th, a year ago, and look how high the S&P is, right? And then you scroll to the bottom of the screen and you say, well, how has his algorithm performed historically? Has it been a good buy and sell indicator? And then you say, oh my God, it has. It's a 50% better return. So type in every stock. I mean, Apple actually gets stupid. Apple's over 1,000,000% return, which is not normal. All right. Georgianne, you have to use the link on your screen. It's financial.com/thirsty. If you just go to Financial, you're not going to see the deal. And oh my God, are you going to overpay? I own the company. I'm a business partner. So I get to make the rules. And the rules are when Jeanette comes a knocking, I answer. And she said she wants the best and you get the best. Last month, this was $4.97, even for my own people. This is the mother of all deals. So now it's $100 less than the super low price. After signing up, can you show on the site where you, oh, John, good question. This is for everybody that's signing up. Reagan's now telling me we are down to 17 spots. So Reagan is our rockstar customer support queen. She handles everything billing related. So 17 spots left. So once you guys log in, you've joined and you log in, I want you to go click on your name and then I want you to go click on Documents. Do you see that in my upper right-hand screen? I want you to click on that. When you scroll down, you'll see my hot list, which, by the way, do you see this ebook here? We're down to 11 spots, so we're about done here, guys. It's starting to go even faster. 11 spots, grab it. The price you see, you're locked in for life for Platinum Access. Everything I've shown you today, Platinum Access. You got it. Every year is $397. The $297, that's just a super duper bonus. Because of course, you know what Jeanette says. Hey, Ron, thanks for that $397. You got anything else? I'm like, I don't know. Do you want my left arm? So we threw in the second year at $297. Now, you see that stock and options ebook? We sell this on Amazon for $37. Once you come in, you click on your name, you click Documents, you hit download, you get a copy of the ebook too. The entry and exit system videos here, and a whole bunch of other docs, whether you do straddles, strangles, debit spreads, credit spreads, leaps, you get access to that as well. Yes. So Dave P, everything you saw today, I'm not kidding, it is $397. I do what I say and I say what I do. Pretty straightforward. All right, let me see other questions here. All right, so chat box. Dave, you keep trying to sign in, you sign up, you get a message. So Dave, if you give me your email address here, I can help you. Because we see you're from TradeThirsty, we'll take care of you. And Reagan might be accounting for you as one of 50 spots anyway. She knows to do that. Lennar B, can I get the $397 price grandfathered in? The answer is yes. You'll be always locked in. This is not a one-time thing. This is $397 every year. So here's the deal. This is also a renewal. Every year we're going to be billing you $397. That's what it is. However, 2 weeks before you're due to be billed, we actually remind you and ask you, you want to keep going. So it's not going to be a blind charge. We're going to go check in with you 2 weeks prior to your renewal. So we're going to give you the heads up. We're just not going to ding your card. Freddie, is your scanner browser based? Now, I am not a tech wizard in the terms of programming land. I help build financial, but that's basically telling people what I want and then they go do it. If you will, I'm the customer interface guy. If you say it's browser based, I'm going to say yes. You could use Chrome, Firefox, Microsoft Edge. You go to financial.com, you log in, and then we have our servers. Our servers used to be, I think, in India. Now they're all US based. Some of you guys are already members and you want to add more. You can add more years today. Yes, you can. John W, yes, you can add more years. Rod, you're in for 2. Carrie, I hit your question. All right, let me just see where we're at here because there may be no point to keep going if we hit 50. Let me see what Reagan's got. Reagan, where are we? Oh, we're down to 6. All right, guys, final 6. Like Jeanette said, this offer is going to expire. We have the page set to 50. Once you hit 50, it's over. It will lock. Oh, John says, thanks to Jeanette for the $100 PayPal. That is awesome. And he's going to use it to buy. I like that. So John's using the $100 gift to buy this. That's awesome. Hey there, Craig R. What time is the workshop tomorrow? 10 a.m. Eastern. All my workshops are recorded, and then we email you a copy of the replay later in the day. So we use Zoom for our webinars. So usually Zoom has it done in a couple hours. I don't know if there's going to be more lags just because it's Black Friday weekend, but usually you'll have it before dinner time. Hey, Lori, you're most welcome. Okay, this is from Maria. Will you actually show us entries and exits? The answer is yes. Now, here's the thing. I'm straight up. I'm a no bull kind of guy. I cannot tell you what to go buy and what to sell. I'm not a licensed financial advisor. I can't say go buy Apple on Monday. What I can tell you to do is go buy Apple on Monday in a paper trading account and you tell me what happens, as an example. So when I came to you guys today with Lennar, Toll Brothers, DHI, Pulte Homes, all these home builders that traditionally do well this year that actually didn't get hurt much today, I want you to put them in a paper trading account. I want you to follow them for the time period and then write back and say, holy crap, Ron, 3 out of the 4 won. Notice I didn't say all 4 out of 4. Nothing's ever perfect. I can't predict the future. But there's no way I'm coming back into these events with Jeanette if every single trade idea gave you was the biggest bomb in the world and everything stank up the joint. It's not, it's not that I'm a good stock picker. I just share the data with you. You see it, and then you tell me what happens. And just to finish, because I wanted to talk about stock score today because the market was dropping. But when I was doing member webinars, and I did an open house as well, I said to you guys in October, when I was doing an open house, it was actually, I probably have the date here. I think it was around October 1st or 2nd. The market, here's F5 networks. This is just standard. This is not rocket science. And they said, oh, the market's rolling over, F5's rolling over. I said, listen, all I can tell you is this. When we get into that earnings report, the stock just blows up out of nowhere. And look what happens. Here's the earnings report, and the stock blows up out of nowhere. And then I told everybody, like I showed to you earlier, I said, ICE, it's the same thing. Look what happens. This stock has gone nowhere. In fact, this fires me up at times because I've heard Buffett say this, and I've heard other fund managers, that if you hold the stock for the whole year, you might do okay. But what you really need to know about is holding the stock during its specific window. And Buffett has said that if you miss the biggest days when the S&P was up on the year, you're guaranteed to underperform. That was the gist of his conversation. The same thing is this. Why would you hold ICE for a whole year when you know the window for ICE is October through now? The stock just, like, you literally have almost like you're peeking around the corner, looking into like a crystal ball, if you will, and say, oh, is that when ICE goes up? Yes, it does. Let's go type in ICE and let's see what happens. Search. We're going to go seasonality. And we take ICE. Look at this. There's September 14th. All of a sudden, October 5th. Look at that. To the day. This is what is so crazy. To the day, October 5th. All of a sudden, the line does what? Why, golly gee whiz, it starts rallying. Huh. Over here, where's October 5th? Right there. Seasonality is not about catching the exact day. It's about knowing the window. In this particular example, it literally caught the bottom within 1 day, and then it just goes bonkers. How frustrated would you have been right there to say, oh, this stock is sideways. This looks like a good bracket trade. This looks like a good iron condor. Maybe I should not pay attention to this stock. All it does is go nowhere. And I come to you and say, buckle up, Buttercup. She's about to blow. Well, how could Ron ever know that? Because I went to financial, and that's what the data said. Get ready. October is its rockstar window the majority of years. So you're going to use this software just like I would. I'm not going to use it better than you. You're going to use it the way I'm going to teach you if you want the help, and then you're on autopilot. It really is straightforward. Looks like SHA, S-H-A-A. So what's going to happen is right now it's about 4:45 Eastern. I'm going to have to wrap up. I need to let Jeanette go, and I will let all you guys go. But when I'm done here today, I'm going to group all you people together in an email, and I'm going to send you an invite to tomorrow's session. Make sense? So probably I would say around 6 p.m. Eastern. So in the next hour, you're going to get an email from me that says, hey, here's your link and you can go ahead and register. And even if you can't attend live tomorrow because it is a holiday weekend, maybe you're going to do some shopping or something, or you're working, I'm going to send you a copy of the replay later in the day, and then you'll be all set. John, does the word chill in financial mean anything? Financial.com was taken, and it was actually my business partner who thought of the name. And he said, you know what, let's make it Financial. We're going to be chill about this. Because it really, it just really is like, just sit back, hit a couple buttons, and chill out, and just see what stocks move. That's really all it is. And then remember, you have two choices. You can use our algorithm, which is human based, or you can just say, boy, that Ron guy, he sounds sort of nice, but we just want to go with the raw data. Let's just stick with the data. And you can do that too. I would encourage you to use our algorithm because it certainly can't hurt. It's going to call the herd. It's going to help you sidestep ones that are already looking a little rotten. All right, Reagan, where are we at? I'm talking up a storm here. 3 spots. Oh, you texted me. What did you text me? Oh, two spots. All right, I'm going to stop here. I want to say thank you to Jeanette and to you guys. Let's start with you. Thank you for coming to this event. Jeanette always puts on a great show. We had 7 speakers. I've met, I think, all but one of them. So I know some of them personally. A bunch of great folks. A lot of great information. I always enjoy doing this event. And like I said, I actually don't even do a Black Friday event for my own people today. I actually kill the whole day and I just come here for you guys and for Jeanette. So Jeanette, thanks for having me. I always appreciate it. You always bring in such a great group of folks. They ask great questions. You have any questions, you can follow up with Jeanette or respond to any email we sent you as well if you had a question, and we'll be happy to help you. So the link on your screen is financial.com/thirsty. If you have any problems ordering, let Jeanette know right away, or put your email here so we can grab it. And when we do hit number 50, the page will go to sold out. And then the $397 grandfathered rate disappears, as well as the second year at $297. That's going to go away too. All right. So happy holidays. Wish you guys all the very best. And Jeanette, thanks again for having me in. I appreciate it. Take good care.